we want to shift gears a little bit real quick and talk about like, because we are in a bull market now and because prices are going to be going up and people are at some point going to want to be exiting this market to a degree anyway. I mean, we still do have, like you mentioned earlier, Frank, like crazy volatility here. So, I think it behooves people to, just kind of let things sit and never look at it and walk away, as much as we also do have a long-term mindset. But we wanted to talk a little bit about like kind of scaling out strategies and possibly where to park money like in a bear market and different strategies that kind of blend like crypto and some of these real world assets, even though we're not really interested in being in the real world assets long term. But go ahead, Ewok, if you have that.
Well, go ahead. You finished it pretty much.
Okay,
That's
no
the majority. Yeah, go ahead.
I didn't mean to bogart the question.
You're good.
But yeah, again, people could get to like levels they never dreamed of this cycle, like monetary, like that instantly rich syndrome or sudden wealth syndrome, whatever. And they may want to retire or step away, or at the very least, like take some off the top and then invest back in at the bottom of the next bear market. But really making that call, and I'm not asking you to say this for anybody in specific, because obviously we don't do that here, but how careful do you think people should be about like quitting a job or ridiculously upscaling their life, when they're getting out of the bull market this cycle or the next cycle or whatever it may be? And then where do you think people would be best kind of parking their money, not financially advising, maybe just talking about your own experiences, but in that meantime, while the market kind of corrects itself into a bear market and then maybe wanting to reinvest again? Could you talk a little bit about, since you obviously have a lot of it, personal finance skills, to make sure that people don't ruin their lives, for lack of a better way of saying it, as we get to the top of this bull market where they, quit their job, upscale their lives too much, and then they just have nothing the next thing you know? How would you go about some of those strategies?
Yeah, it's a fantastic question. I can only speak from experience, and nothing that I say should be taken without consulting their own personal advisor. But from experience, I'll be one to say that in my career, as I made more money, I started spending more money, right? Mm-hmm. And if you don't take the wisdom from people who would tell you don't do that, you're going to set yourself back 5-10 years. I promise you. The most important thing when it comes to accumulating wealth, I think you should learn how to do your personal finances before anything. And the people who are desperate to get out of their job, and they're willing to just sell whatever it takes to get their number, just to exit their job, they're going to be the people who are going to regret it 5 years from now. And the reason why is because even if you manage to escape your job, if you don't know personal finance, so personal budget, you are going to blow that money very, very quickly, right? And then the people who say, you know what, I don't have to quit my job, but I can go blow it, you're going to go buy a bunch of useless stuff that's going to depreciate, and then you're going to be left with nothing. Mm-hmm. So I've done it. I'm telling you, I've done it. Okay. And I've done it at a smaller scale. So just imagine people who cash out $1 million, right? People think $1 million is a lot. $1 million is not a lot. After taxes, after a few stupid things, that million quickly dwindles down to a couple $100,000, and a couple $100,000 is not much. So I'll speak on what I'll do whenever I deem the time is appropriate to exit. First, I'll never market sell everything, because I'll lose 30-40% of my position just from slippage. Why the hell would I do that? Yeah. I'm not that desperate for a cash out. So I'll exit out slowly to where I'll get close to a 1-to-1 ratio on each position that I'm sold. So each tranche that I'm selling should be a 1-to-1 ratio. If it's $1 million and I'm cashing out 100,000 at a time, I want that 100,000 to be as close to the value as to 1-to-1, not to pay so much in slippage or because I'm dumping too much into the liquidity pool. So the next thing is, whenever I do cash out, I want to live off the yield that value, the face value that cash produces. So if it's $1 million and you want to go the simple, basic, most boring way, conservative, put into the S&P, you can now live off 100,000 without ever touching the principal. right? So anybody can go, if they're really that desperate to escape their job, they can go live off that 100,000 anywhere else in the world. El Salvador is a perfect example of that. You can cash out into Bitcoin and not have to pay any taxes, right? I'm Salvadorian, so I would know. That's one way to exit, and it's a smart way to exit. But even then, the people who don't study personal finance, that's why I'm an advocate for Dave Ramsey, because I used to think he was a joke. And a lot of the stuff that he is when it comes to the business side doesn't pertain to the average person. But if you understand the basic principles of personal investing or personal finances, when it comes to accumulating a large sum of money, you are going to be able to handle and manage it and make it grow rather than just spending it. I would rather somebody take $1 million, put it into investment that's going to yield 10%, and then with that 10% go buy a Lambo and pay off the Lambo with the yield rather than buying the Lambo cash. Because then you're just blowing $250,000 and now you have nothing when you could have just, put it into the S&P, live off the yield, and then with the yield pay for the stuff that you want to have fun with. Every single person on YouTube who knows a little bit of money is going to tell you the same thing. Don't spend the principal, live off the yield, and go enjoy your life that way, right? So that's the way I'm going to approach it. And there's multiple different assets out there that you could do the same way. And what this individual just said, money flows from the impatient to the patient, that's entirely correct. The people who understand that is the philosophy of Warren Buffett. People who want this quick, I can't wait any longer. I'm willing to take, massive loss on slippage because they can't have the patience to wait. They give up money, just literally leaving it on the table due to impatience. So that's my way of exiting, is that whenever I get to that point, and I'll have a career that I love. So I'm not desperate to cash out millions of dollars at a time. That's why if I have a corporate career and the same philosophy is taught to me, wait 30 years to your retirement, but I take that same philosophy into crypto, there's nothing that changes between the wait time. The only thing that changes is the substantial net worth that grows. Now, rather, I don't have to wait 30 years to exit my job if I want to. I can wait 10 years, right? But the beauty of it is not what you decide to do, but the choice in which you decide to do. The beauty isn't being rich, but it's the freedom that decides, okay, I want to do this, but I want to do that. You're not making decisions off of emotion or rationale. You're making decisions off of peace and financial stability. And that's a beautiful place to be, because you're not making decisions based off of certain circumstances. Maybe people who hate their jobs, they sell their position so early because they hate their job so much. Well, it'd be significantly better if you just found another job and then cash out a portion rather than the whole thing. Yeah. All right. And I know a lot of people who think just like you two agree with that statement. It's just a lot of people who end up doing the opposite is the newbies. It's the people who don't believe. It's the people who say, oh, this is not going to be here forever. Or they are just going to be the ones that you're going to see 5 years from now being a beggar again because they didn't learn the basic principles of budgeting and wealth accumulation.
I love what you're saying so much, because, you would want to say to somebody, and I've said it to myself, like, in this country, not that we're in some kind of a third world country necessarily, but we live in scarcity our whole lives. You live in scarcity, like you were saying, maybe working a job that you hate. People live in paycheck to paycheck. If you are lucky enough to have found this investment now and are heavily invested over the next 8, 10, 12, whatever it is, years, why would you want to then just undo all of that by upscaling your life so much that you're just right back in that scarcity position? Make some sacrifices here and there, whether it is like the home that you're upgrading to, the meals you want to eat, like you were talking about a Lambo. Do you really need a Lambo? I mean, I think they're a bit clownish, to be frank. No pun intended there. But yeah, and I want to let me ask you this as a follow up, because Jeff Sanders made an interesting comment here. You pretty much touched on this, Frank, but he said, yes, you're right. Retirement strategy with 10% and the S&P. I'm assuming he means return. 4% rule. Are you one of those guys? And I know Dave Ramsey talks about it, but do you have familiarity with like he's talking about the 4% safe withdrawal rate? That I forget the name of the guy who developed that theory. I think it was back in the 80s or 90s. But they've toyed around with that number 4.5%, 5%, essentially saying that like if you park all that money away for 30 years and withdraw at 4% a year, you're never going to run out, basically. I'm curious what you make of any of those rules. And because, depending upon your age, and if you are getting out in a couple of cycles or so from now, you may be looking at more than a 30-year time horizon. That's why you also want to be very careful about like what ventures are you taking on after this. What you got to have some other kind of money making mechanism. Maybe it's just the yield. But yeah, what do you make of that 4% rule, or do you really pay a lot of mind to things like that?
Before you answer that, Frank, just a shout out to Noah Rodriguez for the $5 super chat. We appreciate it. Thank you.
Appreciate that, Noah.
Awesome. Good job, Noah. I'm going to speak a little bit of the people who are desperate, because those are the only people who are so eager to, exit very quickly, not have delayed gratification. If the people who are so desperate to get out of their job and to retire, if you take $1 million and you retire off of that 4%, you're living off of 40 grand a year. Now, to some people, retirement is freedom to do what they want without having to go to a job. For some people, retirement is living a life of luxury. Okay, well, if it's a life of luxury, I promise you, anywhere around the world, 40 grand a year, you can live like a king. You can live like a king on that amount of money, right? You don't have to live in the States. So if your people are so desperate to get out of your job, that $1 million threshold to put into S&P and then withdraw at 4% should be enough for you to do whatever you want with your life, give you the time and freedom to decide what you want to do next. And then you can go travel around the world on a $40,000 a year salary. All right, that's what that 4% rule indicates. Me, I'm the type of guy that I could be worth $10 million, and if I love my job, I'm staying at my job. Right? That's just who I am. So until I have, I need $10 million for this massive project that's maybe like a nonprofit, then that's when I'll think of something differently, But at the same time, 4% for those who want to be conservative, who just want to check out from the corporate world, who don't want to do anything with crypto, they just want their 1 or 2 cycles and then cash out their 1 million. It's enough. Like, it's enough for you to be comfortable. It's enough for you to be happy. So I always tell the people when they ask me like, hey, like what is a good number? You have to reverse engineer your plan. What is your end goal? And then work backwards from there. You can't, it's not the same plan for everybody else, because to some people, $1 million is a lot. To me, that's nothing. To me, that doesn't justify the amount of turmoil and all of the volatility that we took to get here, right? So it just depends on who you're talking to, what their end goal is, what for somebody who wants to be single their entire life, to somebody who wants to be a family man, 2 very different numbers, right? So, but as a whole, as a general, 4% withdrawal rate in an investment like the S&P is safe. It's conservative. It's not something that you should ever worry about touching your principal.